Income machine. It is time for the update on the income machine. We have been selling cash secured puts on MicroStrategy and NVDA for a couple of months now. Where are we at right now? I've got an update for you on this. So we scroll down here. We have collected $4,325.99 in premium since July on these two tickers. Okay. I sold a new put on NVIDIA this week with a $129 strike for another $800, taking my NVIDIA premium up to $2,629.93 versus my MicroStrategy, which I've had to take a break on since the beginning of October because it's just gotten out of control and I don't have enough money to do it anymore right now. I'm working on that though. But my MicroStrategy collected premium is $1,696 currently. So together that's $4,000 that we've collected since July. That's pretty great. That's pretty fantastic. Now, one thing I will mention, we'll go to look at MicroStrategy. MicroStrategy had an insane run recently. Okay, it went up over. Let's get to the top there. It went up 100% since the end of August. So since the end of August, this thing has gone up 100%, meaning that if you had just bought 100 shares of MicroStrategy, you could have significantly outperformed my $1,600 of premium collected. This is one of those situations where you go, man, I kind of missed a great opportunity here. Okay, because this thing went up. So if we bought right here at 113 and we sold at 215, where it currently is right now, that's a $100. That's over a $100 gain. That's over a $10,000 increase there if you just had 100 shares, which you need to put up enough money for 100 shares to do a cash secured put, meaning I could have bought 100 shares of MicroStrategy and in 2 months been up over $10,000. So that was a missed opportunity there, but that wasn't part of the experiment. The experiment was to run a wheel, see how successful it was on MicroStrategy and NVIDIA, and see how much money I could make doing that. So that would have been outside of the scope of what I was doing. Okay. Now, if I had gotten assigned my puts, yeah, if I let myself get assigned, I probably would have done very, very well. Or I would have sold a cash, a covered call somewhere around 180 and then missed the rest of that run up. We'll see. I mean, I don't know. Those are those things that you just don't know. This is the unknown that you can't really plan for. So we did miss out on something like $8,500 of potential profit from just owning MicroStrategy shares versus selling cash secured puts on MicroStrategy. I will say that. But with just $26,000, $27,000 in, in less than 3 months, we've collected $4,325. What kind of return is that? That's from some earlier math. What kind of return is that? So 4,325.99 divided, let's go with 27,000. That's 16%. That is a 16% increase in less than 3 months. If we extrapolate that out, 16%, and that's in, let's say 3 months, we times that by 4, we're looking at a 64% increase. And if you take 64% of $27,000, you've got $17,000 of profit at the end of a year. So all I've got to do really is maintain a similar sort of trajectory I have been on right now with these two, and I could be looking at collecting anywhere between $15,000 to $17,000 by the end of a year, so next July. That's pretty exciting, and you know what? I'm okay with making that a little bit slower than if I just bought MicroStrategy. Now, if it pulls back, I might end up doing that and stop doing this cash secured puts for a little while if I get a nice pullback right here. Right now in the next couple of weeks, I'm hoping for some volatility. We'll see. If I get that, I might just buy 100 shares or do an at the money cash secured put. Hope that it gets assigned, or even a slightly in the money one, get it assigned, collect that $1,000, $2,000 of premium on top of that, and then write it up afterwards as well. I might do something like that. We'll talk about that. Let me know in the comments. What do you want to see? Do you think if we come down to, let's say 170, that I do an in the money cash secured put like at like 175 or something for a significant sum, for like 2 weeks out, and then see if it gets assigned, and then from there write up the shares and see where it goes from there. Let's see. I mean, I'm curious. I'm interested. I might do this. So that is what we're looking at right now with MicroStrategy is that it is on a heater. So we're not really getting back into this thing until at least it comes back to the 5-day moving average, which is $200, okay? What I really want to see is it come back to this shelf right here, somewhere between about here and here. I want to see it come back to about the 21-day moving average, somewhere in this box, before I'm really interested in recommitting to MicroStrategy for cash secured puts. Because as it drives up higher and higher here in this space, I think it's getting a bit overheated. I think it needs to show me a little bit of pullback here before its full rip into Q4. Now, it could just take off and never look back, and that would be rough for me, but we'll reassess if that happens. I am looking for it to come back, though. I am looking for it to give me some kind of pullback on this thing because we had a falling wedge that just broke to the upside. That's actually pretty good. That's a pretty bullish move right there. I'd like to see it at least come back to the 5-day moving average, preferably the 21-day moving average, which is currently at 180. Now, by the time it gets back there, it might be 187, 185, 187. We'll see. But I would like to see it at least come back and tap the top of the previous highs back here at like 182, 180, 4-ish before carrying on upward. Let's also look at NVIDIA. NVIDIA has been just kind of unstoppable as well. It's been, okay, I can't type. NVIDIA has been also a bit unstoppable here. So if we come into here on the daily for NVIDIA, it is hanging out near the highs. The 140 was a high. It tapped that twice. That could be a double top. That could end up being a double top, actually. If we go to like a weekly or a monthly, that might look like a double top. Let's go to a weekly. That's looking very double toppy right there. I don't really like that. If we lose the 5-day moving average on this thing, which is at 129, yeah, if we lose it at 129, I would be looking at NVIDIA to come back down to test these highs down here around 96 bucks maybe. I mean, at least the 21 week at 116. I'd be looking for at least testing the 21 week at 116 down here. I'd be looking for that. If that didn't hold, I'd be looking at 96. So let me draw those actually. 96 would be an area of, well, 97 would be an area I'd expect it to come back to if it can't hold there. And the other area I'd be looking for to tap would be about right here, about right there. I'd be looking for those two. If it fails here where it currently is, and I mean, right, it is overheated right now. Lots of big upward moves. Yeah, I might be looking to get out of this thing right now because I am actually 30% profitable right now. So I might be looking to jump out of this on Monday and look for it to come back to at least the 21-day moving average, maybe even into this zone here between 121 and 116 for NVIDIA. I might end up sitting on my hands for a couple of weeks looking for that move back down. But we'll see if their earnings come in good here. If they get some really good earnings here on November 14th, this thing's going to blast off again and never look back, just like it did in the past. So that's why I'm not quite like selling yet. But I don't want to get priced out of this one too, making me have to look for new avenues of doing cash secured puts. So that's where we are right now with that. I have added a new one, ACMR. I've talked about this on the channel before. That they sell cleaning products for silicone wafers, which is essential in the development of semiconductors and the manufacturing of semiconductors. They don't have a lot of American customers yet, but they are working on getting more. Largely right now they work in China, but they are expanding into the US as well, which is a good sign for them. Now let's move on to ACMR. So I've collected so far $69.34 of premium for a 1-month output, a little more than a 1-month output at a $16 strike. Okay, that's what I've done. Let's bring it up. I probably could have done something like a 19 or something, but I was looking at this as potentially in a downtrend. It could come back down to as low as $17.50-ish, maybe even $17 before going back up. I mean, it could even come as low as this big trend line down here at $17.30 before going back up again, because I saw this big blow off top here on October 7th. Huge blow off top, big one. So we know that there are sellers here between $23.50 and $26. We know there's a bunch of sellers there just waiting to some bears to bear down on us down there. But and it did an island reversal, which was very, very, very bearish, and you can see it went from 22 all the way down to 18.30 off of that. And we're in a decently aggressive descending channel right now, okay? We went to the bottom of that channel on Thursday, and on Friday we're at the top of that channel. and we closed back towards the middle of that channel, which is not necessarily bullish considering we came to the 21-day moving average at 1972 and we got rejected there. So that's not great. We could potentially see this thing come all the way back down to $18 before trying to curl back up again. I'm watching that real carefully right now. But here's the bullish part. Momentum, this orange one, going up, right? Beautiful. The fast oscillator, the blue one, came to the bottom and is bouncing up. This pinkish one is like a gamma. It measures gamma. And that one is also pointing up, going into positive gamma. That'd be pretty great. And we'll see. Yeah, it's a new one. I'll talk about it another time. But they're pointing up. They're all pointing up, and when they point up, it tends to come up at least to the top of the previous big candle, which right now would be about $21. I'd be looking for it to potentially have some struggle around 21, maybe even at the 200-day moving average at 22 before curling back down again. But what I am seeing is an inverted head and shoulders. So I got an inverted head and shoulders right there, kind of a big one, pretty ugly. Inverted head and shoulders. Look at that, so ugly. It's got a couple of them. But the 200-day moving average is the neckline. We get above that, I'd be looking at it coming back up to 26 before eventually the bears reigniting their attack on ACMR, bringing it back down. But it's on the lows. It is a profitable company. They sell something that is important for the production of semiconductors. I don't see that industry going going anywhere anytime soon. They are expanding more into the United States, so I am looking at this company positively for that. Okay. Some of you may be wondering why I'm not doing VERT. So Vertiv, I did this in my paper account because I didn't have enough money to do Vertiv and MicroStrategy at the same time. I have collected in my paper account $435 of realized profits on that in the paper account, so it's not real money in the paper account. And since then I have not done another one, and I haven't done another one because if we go to Vertiv Holdings, it is on an absolute tear. So we were talking about this. I was talking about this between $80 and $75. Okay, that's when I was talking about this thing, and it went from $80 to $75. It went all the way up to a high of 16. So I was talking about it down here, and it went up here. It went up 54% in just 2 months? 54% in 2 months. So it's at the highs again. It's at the highs again. So I want to see it come back to the 21-day moving average around 104. I'd sell a cash secured put right here around $96, $97, which would be this area of support right here, right there. I'd sell it there. And then I look for it to come back up to about 107, 108, maybe 109. And then I would close that position again. So I'm waiting. So that's why I'm not doing Vertiv. I'm waiting. I'm just sitting and waiting right now because it's on a heater. It is on the way down. You can see the momentum oscillators is at the very top. It's ready to come down. The fast moving stochastic is making higher lows and lower lows, lower highs and higher and lower lows. They're on the way down. The other one is doing the other line is doing the exact same thing, lower highs and lower lows. So I'm looking for this thing to come back to the 21-day at least, maybe a little deeper, and then from there I'd be looking at it to recommit to the upside afterwards. So I'm just sitting and waiting on Vertiv right now. But as of this day, I have collected $4,325 from NVIDIA and MicroStrategy, as well as I have collected $69.34 from ACMR. And if you remember, I did American Airlines. I've collected about $53 on doing 2 of those right now as well. So far, that's where we are at with the income machine. So we're sitting at just a little over $4,400 in about 3 months. We've so far collected about a 16% return on our MicroStrategy and NVIDIA. I haven't calculated the other ones yet, but for now, we are currently on trajectory to collect about 64% of our original investment amount by the end of a 12-month period, which would result in about $17,000 of gain over a year using $27,000, which is not bad. If we went, let's do it on the high end, 17,000 divided by 12, we'd be collecting about $1,500 a month off of that, which isn't enough to live where I live, but it is enough to live in some places. So you potentially could have an entire income off of $27,000 portfolio, off of a $27,000 portfolio. Keep that in mind there. So anyways, that's all I've got for you today. Please like, comment, subscribe, share this video. Check out the Trade Cave store, link in the description as well as the channel bio. Don't sleep on the sticker shop on Redbubble. That link is also in the description and channel bio. And have a profitable day.